Welcome to ShortView Trading. This is your morning market hit for Wednesday, 13th of January. What matters today for traders? Well, concerns are growing in markets around the tightening up of liquidity. The debate at the Fed amongst policymakers is now around the timing of tapering. That, of course, was flagged up in last month's minutes. It's also been discussed by a number of Fed presidents recently and yesterday. Bullard and Rosengren, for example, still quite dovish. Others, though, including Esther George, characteristically hawkish. All of that bears watching closely. And of course, we can see the impact of that putting pressure on a number of key barometers of liquidity in markets. Arguably, that's most obvious in the more speculative corners of markets, with Bitcoin down 17% from its highs on the 8th of Jan. Gold has also come under pressure this week, failing to move above its intraday highs from early November. Real bond yields, arguably one of the best measures of Fed liquidity in markets, have backed up. They were a little weaker yesterday, but importantly, they've held and rallied from their key technical support level at minus 108 bips. And tighter liquidity has been illustrated by the US dollar with strength in the past week. The key question is, how much does this matter for markets? Does it create an opportunity to buy the dip, or will risk aversion and tightening liquidity spread and spill over into key headline equity indices? We address all of that in our daily trading publication, available on our website and to subscribers. In that, we update not just our models, but also our 1 to 2 week trading recommendation for US equity markets. So far, risk aversion and tighter liquidity, as you can see on this chart, is nothing more sinister than simple rotation amongst the key sectors of the equity market. Growth and defensives have broadly traded sideways, while cyclicals have been the key beneficiary of rising bond yields. The question, of course, is what happens next, because, of course, cyclical parts of the equity market have become overextended on a number of technical measures. Equally, the price action is strong. There's clearly underlying momentum in those key cyclical areas of the market. If we drill down into classic cyclical sectors, for example, you can see financials broke out to a new record high yesterday. While energy was also very strong, the sector was up 3.5% on the session, and it's closing in on its highs from June last year. So we're watching sector performance closely today. We're also watching liquidity indicators and how they behave. And in that respect, the inflation number out of the US, 1:30 London time for December, will be key in that respect, as well as, of course, speeches by various Fed presidents. Brainard and Harker both speaking today, and most importantly, Clarida, 8 p.m. London time, also speaking. That'll be watched closely. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and Facebook. Thanks for listening.